Welcome to the Commercial Real Estate Academy podcast, the podcast dedicated to simplifying the commercial real estate industry for the masses. Each week, we sit down with industry experts to dissect the many facets of commercial real estate and extract valuable lessons you can apply to your business. Whether you're a new or seasoned business owner or investor, the Commercial Real Estate Academy podcast will be your go-to resource for all your commercial real estate needs. Now, here are your hosts, Raphael Collazo and Jeff Walston.
Welcome to the Commercial Real Estate Academy podcast. I'm your host, Raphael Collazo, here with my co-host, Jeff Walston. How's it going, my friend?
It's going great. Rounding off a busy week, trying to wish for warmer weather and just getting ready for the weekend, have my kids over, and we're planning on having a great weekend with them. And what about you, my friend?
Yeah, I mean, same. I not the kids factor, but the cold piece is really what I don't like. The electric bills, never fun to watch, never fun to see when it's like 8 degrees outside. I think it was the low yesterday. So I can't wait till we're in nicer weather. I'm pulling for March, April, and May when we start seeing some 60, 70, 80 degree temperatures. But today's conversation was not chilly at all. It was actually quite vibrant and warm, and that was with Aileen Prak. She is a financial analyst at a company in the Bay Area, and also works on syndications, multifamily and syndications to be exact. And so we spoke primarily about that, and also her brand building efforts via her podcast, which is phenomenally successful, very good, and I would highly encourage you to check it out. But really, what we focused on within this conversation was, first off, what got her interested in commercial real estate. They first started off in the single family space and then realized that multifamily could be a unique opportunity and decided to, kind of focus their efforts on that front. We also talked about their investment thesis, why they invest in multifamily, what exactly about multifamily they like, and what are the characteristics of these opportunities that could be beneficial to investors. We talked about some of the early struggles they faced, primarily related to figuring out which sponsor to invest in, because they first started off on the passive side, looking at deals and eventually investing with another individual who would then go on and execute the business plan. So they talked a little bit about, what that looks like. And then also they talked about what W-2, how it looks like to be in a W-2 job and manage kids at home, and also have to deal with, building a business when it comes to their syndication business as well. So I think we just covered so many great topics within the podcast, and I think you guys are going to get a lot of value from it. Jeff, do you have anything else you'd like to add?
I just wanted to highlight what you said, Raphael, on particularly what they're juggling for everyone that's listening out there that has kids and you're working at a full-time job and you don't think that you can get into investing. Aileen and her husband are doing it, and they're taking their sacrifice and their time, not with their kids, but of themselves after, they're doing the whole home life, and then even before on the drive to work, and they're constantly, intentionally going after what they want. So don't feel like that, you have a roadblock or anything, because they are proof that it can be done. So I just wanted to highlight that for all the listeners out there that do have kids and full-time job, like Raphael said, and they're trying to get into the investing world. It can be done. So
definitely. No. And they're super deliberate about what they want. And I think, especially with their podcasting efforts and their growing of their network, I think they're going to be, a name you're going to recognize going forward over the next several years. So we're really excited. We were really excited to sit down with Aileen and talk a little bit about her story. I think you guys are going to gain a ton of value from this podcast episode. So without further ado, let's go ahead and dive right into the podcast. Well, hey there, Aileen. It's great to see you this fine morning.
Hey, Raphael. Thanks for having me on. It's good to see you guys as well.
Yeah, thanks for coming on.
Definitely. No. And I think we got connected through a mutual connection of ours, Tyler Chesser. So I'm really excited to dive in to your backstory and some of the things you guys are working on. And I think it's going to be great for our audience to learn a little bit about your insights. So really, to start off the podcast, what we like to do is we like to learn a little bit more about the person across the table from us. So if you don't mind kind of sharing a little bit of insights regarding that, that'd be awesome.
Sure. So I am a mom of 2. I have 2 little young kids, a boy and a girl, ages 1 and 3. So that's my full-time job. First and foremost priority. Also a full-time W-2 worker, and I got started with real estate a couple of years ago. I started with single family and then quickly found, before we got too deep into single family, found multifamily and really liked the space so much. Was surprised about the model and that something like this had existed. So really started to build up our education, started to listen to a bunch of podcasts, listening to, people talk about syndications, multifamily syndications, how do they operate? How does it work? And wanted to really understand and see if it was something that was feasible for us. And so what we did was we ended up investing passively first in several deals with a couple of different operators that we had vetted and trusted and really built a good connection with. And then from there, we ended up starting our own podcast afterwards too. And then now we participated and, co-sponsored a couple of deals ourselves. And we've just been really excited to be in this space, be able to share with our network as well about multifamily and syndications, and that there's some type of vehicle like this out there. So that's really kind of my background and how we kind of got started with real estate and syndications.
Oh,
Nice.
definitely. That's a unique background. And for those of you guys who don't know, she used to work at NASA too. So in the financial department as well. So it's an impressive background that you have. And I'm sure that lends itself well as you're looking for these opportunities or analyzing deals to make sure that they are, in fact, a good deal for your clients. So.
Yeah, absolutely. Because every day, we're looking at the main things that we look at too is as we're putting together budgets and looking at forecasting, we're always trying to stay within the project budgets. So we're looking at risk and opportunities on a daily basis. We're looking at managing reserves, staying within our budgets, and looking at the variances all the time. So a lot of this is very translatable to real estate because it's all about numbers. It's all about the spreadsheets. If you're looking and you're understanding the numbers and what's the story behind it, that's all you really, that's like the main thing of it. It's really understanding those numbers and seeing, because the numbers they don't lie at the end of the day if you really understand the story behind it.
Yeah. And I think the key part is the story, because you can make the numbers look however you want them to look. It's really the story that is behind it that you really need to dig into and say, is this really a story that I can believe? And if it is, then that's a great opportunity. So.
Yeah. So I was listening to when you were telling you about yourself and how you got into single family and then you went to multifamily. I'm just curious, why did you choose multifamily? Was there a key moment or a key component of multifamily that interested you, or like why that direction?
Yeah. So with single family, it's something that we're all very familiar with. The biggest change and the reason why we made the switch into multifamily was the scalability and the fact that we're working with team members. We're not doing everything on our own. So we're putting together a strong team to help us all, work together in order to achieve a common goal. We're able to get to where we want to be and do bigger, faster deals together as a team versus in single family. It's fantastic. I love the model, but the scalability wasn't there. It would take us quite some time to build up our portfolio and get to that level of financial independence that we are looking for. And so with the multifamily, the scalability was absolutely there. It's a recession resistant market. It's stable. You're still backed by real assets. And so the concepts between single family and multifamily, similar in many aspects. There's a lot more that goes into multifamily, but a lot of it is very transferable as well too, as you're doing some more due diligence and looking at the, how the property is structured and what makes a good property and location and everything like that. But the model itself was just what was really interesting to us. And of course, the community, meeting the people that we've been so fortunate to meet such great people. And that has just continuously drawn us into this space.
Definitely. And I'll echo the fact regarding the space itself. There seems to be a lot of people who are very willing to give information and just be helpful. It's a very abundant type of mindset. And I've noticed that. I'm in the commercial real estate brokerage industry, and I've noticed that as well. There's a lot of people out there that have an abundance mindset that are willing to contribute to other people and help other people succeed as well. So it's been, I'm sure you've seen that in particular in the multifamily space as well.
Yes, especially for those people who are hungry and who are interested and are really committed to wanting to do well in this space and doing it right. People are willing to share their knowledge. Absolutely.
That's awesome.
Yeah.
So one of the things that we like to ask pertaining to, because we interview people from all different property types, so office, industrial, retail, land, et cetera. So what exactly is your investment thesis? Like, what are you guys looking for as far as properties are concerned? And if you could share, some of those insights, that'd be great.
Yeah. So first and foremost, we take a look at the location and the market itself. So we like markets where people are moving into, that the population is growing, that there's a good amount of job security and growth within that area, so that there's some diversity there. So if one large employer goes away, moves their headquarters, there's still a sustainability of employment opportunities around that area. And we're looking at places where people are looking to move into. So the population is growing. We've been seeing a lot of people moving down into like the Sunbelt states, moving away from cities into the more suburban areas. So those are the types of things we're looking at. In addition, we look for places that, the supply is maybe a little bit more constrained, but the demand is high. So that when your supply is a little bit more constrained, you have a lot more, just the economics of it, right? The sustainability is there, demand is there. The supply, if they're not doing so many constructions up there, there's a high demand for your property or for your services that you're providing. So those are a couple of things that we look for in general. B, C class properties in pretty good neighborhoods as well. If we're looking for C type property, maybe someplace that is potentially in a better area so that we can improve the property and increase it as well. So those are types of things that we look for.
Definitely. No, for sure. Yeah. And I'll echo the fact regarding the diversity of employment, because that's one of the cool things about multifamily is that it's not dependent on one industry to function well, in a lot of scenarios with retail, and I'm in the retail space. I actually, I'm a retail broker and we do industrial stuff as well. And there are situations where if you have a 7, unit retail center and then 3 of them are in the restaurant and beverage space, and then all of a sudden COVID hits, like they can't operate. So it can create, issues as far as cash flow is concerned. Whereas if you're talking about larger multifamily properties, you could have like 18 or 20 or 30 employers there. So even if one were to leave, you at least have that stability on that front. And it seems like from a construction standpoint, it's hard. It's been very constrained as far as the amount of, new construction projects that have come down the pike compared to the demand. We interviewed a gentleman named Bo Berry a while back, and he's a big multifamily broker, and he was talking about that, how in order to keep up with demand for multifamily properties, we would have to have constructed, I think, 340,000 units per year. Mm-hmm. And the last time we even broke 300,000 was like in 1989. So it's like the demand is, we just can't keep up with what is required. And you're starting to see a lot of inventory that is older. And that's why you're saying like the B class and C class properties, because there was a big boom in the 70s and 80s with these new construction projects for multifamily. So that's why you see a lot of the inventory that's coming to market is of an older period. And so that presents the value add opportunity as well. So
I think overall they said we're about $6 million short of inventory. And every day people are now becoming more, the trend from home ownership to renters have now shifted. Less people are able to, because of the affordability of home ownerships and the younger generation's mindset, they're looking to rent more so now in today's market than they have ever in the past. So that demand is starting to grow. But like you said, we are so far behind in supply that, we can't really keep up with the demand that's needed in this space.
Yeah, for sure. And you see it in Europe too. You see a lot of that similar trend in Europe where a lot of people rent versus own. It's not as common as you would in the United States. Like in the United States, the percentage of ownership is much higher than what you would see in a European society as well. So,
Aileen, I was wanting to actually talk about your first deal and in particularly like the early struggles that you faced getting that and acquiring that first deal. Can you walk us through some of those that you went through?
So when you talk about the first deal, are you talking about like as a passive investor or when we
can go with passive. Sure. Let's do that.
Okay, sure. Yeah. So with the passive side of things, I think the biggest issue that we had was getting comfortable with this type of model, working and trusting somebody that you had never met before. Maybe you'd only just talked to on the phone several times, built up a connection, but you've never actually seen face to face, and really trusting that that they're not just going to run away with my money, right? So getting over that hurdle was the biggest thing. And the way we did it was by educating ourselves, really vetting the sponsor, really making sure that they align with our goals and values as well. And then, the deal itself is second to that. Right. Everybody has similar types of deal structure. They're providing very similar types of returns, but it's really the sponsor that you're working with that really makes or breaks the types of deals that you're getting into. And so that was the biggest struggle that we had, was just getting over that initial mindset and then really, really vetting that sponsor.
Sure.
Definitely. Yeah, I can't.
Go ahead, Jeff. Go ahead.
No, go ahead, Jeff.
I was just going to ask another question off that is how long did it actually take you to vet them to where you finally started feeling comfortable? Was it weeks or months or what?
So we spent 3 months before even reaching out to any sponsors, really educating and setting ourselves. I think we listened to like a ton of podcast episodes. I don't even remember how long. Just to give a little context, I was commuting back and forth to work, and it would take maybe like all in times 3.5 to 4 hours back and forth, right? From morning and then to night it would take. So I would be listening to podcasts throughout that time during lunchtimes, in the evenings. So I was consuming as much content as I could to really understand it. And me and my husband were reading a bunch of books at the same time and really just trying to understand this model. And then after we were like, okay, it doesn't seem like a scheme. It seemed like a lot of people have been doing this, right? And so after that, then we started to reach out to some sponsors. Actually, we didn't even start to reach out for some sponsors first. We actually reached out to other passive investors that we had heard on different podcasts and got their feedback on their experiences in the space first and how they thought about it and what are some of the things that they're looking at because they were more experienced, and then wanted to get their feedback and maybe get a couple of recommendations on like who they had liked or, maybe somebody they can help introduce us to. And then we started to reach out to different sponsors and then vetting them.
Definitely. No. I like the idea of you saying like the deals out there, because really, if you look at the deals in the marketplace, the IRRs and everything else is going to shift based on what the market dynamics are, right? Because so for the most part, the returns that you achieve through these different operators are going to be somewhat in line with what the market's expecting. But the differentiating factor is the sponsor themselves. And we had a gentleman, Hunter Thompson, who wrote about raising private capital. And he kind of illustrated that point. He said, look, you really want to make sure that you trust this individual because when stuff goes wrong, which inevitably will, if you do something long enough, there's going to be things that arise that you didn't expect were going to be the case. Like, do you want to be in the foxhole with that individual? So are they going to be of high integrity? Are they going to be in communication with you on a regular basis to kind of explain the situation? So that's really the delineating factor, not necessarily the deal, although that is important. I think the most important thing by far is the sponsor themselves. So,
yep,
absolutely.
So when you're, because this is also a thing. I know there's a lot of people in our audience who are also working full time. So they're W-2 employees are working a W-2 job, and they're looking to get into the investment space. So can you tell us a little bit about how you've been able to manage that? Because it is very difficult, in particular if you're in a career where you're advancing rapidly and your demands on your time are very high. How have you been able to manage that dynamic?
All by intention. So it's very easy to get caught up in all the things that go on within real estate, keeping up with the markets, looking at deals, meeting and networking with people, building up the business side of things. It's a lot of work that goes into it. And if you're not careful, your time can really slip by you so quickly. You can be on your phone scrolling, and then an hour later, you're like, where did my hour go? Like you're just on social media. And so it's really what I remember in the very beginning when we first started out, we did a time audit. So we sat down and basically every 15 minutes, we would record like what we would be spending, what we'd be working on every 15 minutes in 15-minute increments. I think it was for like a week or something like that. And it really gave us an understanding of where all of our time was going and what we were doing in this, like all that downtime that we could be using for something else. And when we identified that, we're like, okay, so now you actively are always thinking, instead of doing this, I could be doing this instead. And so we focus on the times where, in the mornings before the kids get up, afterwards when the kids go down, in between lunch hours or whatever like that. Like every single moment that we have that is available, it's dedicated to learning, educating ourselves, doing some part of the business, something. And so we're just very intentional about where we spend our time.
That makes, and you almost have to, because you don't have the luxury of doing this full time. So you don't have that, the flexibility to say, okay, at 3 p.m. I'm going to analyze these deals, or hey, at whatever time during the workday I can do this, because you have other responsibilities as well. So a lot of times, who said it? I mean, if you give yourself a week to clean your room, it's going to take you a week to clean your room. If you give yourself, an hour to do it, then, you get it done in that time frame. So, being intentional with your time, I think, is really the important piece of information that you shared there. So, yeah.
And then you also have to sacrifice a little bit too, sacrifice a little bit of our sleep because you're trying to fit in as much as you can in the day. At the same time, I don't want to miss out on time spent with my kids as well. So when I have the kids, we're present, we're fully there. I try not to commingle it with like doing work stuff or anything like that. I just focus on them because, they're so small and it's like they're growing every day so quickly. And so you don't want to miss those times as you're building up this other side of things, because ultimately that's what we're trying to do, is spend more time with them. And so if we're giving it up, it defeats the entire purpose. And so, but at nighttime, we can be staying up until like 1, 2 in the morning, like yesterday or the other day, earlier this week, we were up, I think, until like 3 or 4 in the morning analyzing deals. And so it's like, you have to sacrifice a little bit, especially in the very beginning. You got to put the time and you got to put in the effort.
Definitely. Great advice.
Absolutely. That's great. Yeah, definitely great advice. So I know that you host a podcast, right?
I do.
So one of the questions that I had about that is, how does scaling your podcast help with your brand building efforts and your real estate business? Have you seen any increase because of it?
I would say starting the podcast was the single best thing that I ever did with getting started with real estate. One, the knowledge that I've gained just by interviewing the guests has increased significantly. And two, because we're doing a 5-day-a-week podcast, I'm networking with people on a consistent basis several times a week. And so my network has grown. I'm able to leverage a lot of their knowledge, a lot of their connections as well. If we need certain services like a property manager, lender, or whatever like that, I've built a network up where I can reach out and leverage other people's in the space. So that, and also, I've built up partnerships and people that I worked with through the podcast as well. And so it takes a lot of time, like as with anything it does, it takes a lot of time, but it really was a big shift in, first of all, building up your network and your knowledge base, but at the same time, establishing yourself as a thought leader in the space as well, and being a resource to people. I have people reaching out now who are like, oh, I'm interested in commercial real estate, do you have somebody that you can connect me with? And so I feel very privileged and like honored that they have reached out to me and see me as a resource that they can rely on, and that I'm able to provide, some value to them by connecting them with somebody that might be able to help them along their journey as well. So it was a fantastic idea, and I would do it all over again.
Oh, that's great insights. Yeah. And we interviewed Whitney Sewell on the podcast a while back, and he said the same thing. He said, it almost killed me, doing the daily podcast, because it's impressive that you've been able to do that. It's no small feat. We've been doing a weekly podcast, and now we're upping it to 2 times a week coming here soon. And, it's an ordeal. It really is. And you have your other responsibilities within your life, and you have, small kids at home, you got your other job, you've got all these other things going on. So, we definitely commend you for that. But I like to illustrate like a few things that you mentioned there, because I think it's so important for people to understand, is that not only is the podcast that you can utilize a podcast in order to build a thought leadership platform, which is ultimately a phenomenal thing, because in my opinion, your personal brand and professional brand is the number one most important thing you could possibly do when it comes to, growing any type of business, because that's what people know about you even before they meet you. And not only that, but then you talked about the networking piece. How many people have you been able to connect with as a result of the podcast? How long have you been doing it? Almost a year or just over a year?
About a year and a half now.
Well, that's amazing.
Nice. Yeah.
So 5 times, 52 weeks, that's 260 people, and then you have an additional half year. So you're talking almost 300 plus people you may have met. And what does that mean for your network? I mean, they know people too. So like that's thousands and thousands of people that you're separated by just 2 connections. So those type of opportunities present themselves, and it's just amazing. So I kind of echo it.
Yeah. And think about it, a lot of people, especially busy professionals, they don't have too much time on their hand. Their time is very valuable for them. And as they're doing things, you could help educate them and help, provide value to them as they're doing other things through the podcast. So they can listen to what you're trying to say and what you're trying to, share with them through the podcast while they're driving in the car, while they're cooking or on a run or something like that. And to be able to establish a relationship with them, even before you have a conversation with them, it's so powerful, because that's how we were able to, work with some of the sponsors that we had worked with, because it was through the podcast. We already felt a really good connection with them even before we were talking to them. And so you kind of forget sometimes, because like, you listen to them all the time and you're like, oh, I know so much about you. And then when you go to have a conversation with them, you're like almost talking like a really close friend. But then you're like, oh, wait, they've never met me before. They don't know anything about me, but I know everything about them. You already feel very close to them.
Definitely. Yeah. No, that's some great advice. Definitely. So kind of branching off to the coaching side. I mean, this is something that, I'm sure you have in high regard. As far as coaching is concerned, can you tell us a little bit about how coaching has really impacted your overall growth within your personal and professional life? I've worked with a coach in the past for many, many years. I've worked with Tyler as well. So I just kind of wanted to get your take on the coaching side of things, because I think it is extremely important.
Yeah, I really do believe in the coaching side of things. It took me a little while, because in the past, before getting into real estate, we're like, oh, coaching, it's not really for us. I don't really understand how it's going to benefit me. But when we actually decided to make that shift, we had a little mindset shift and realized like, hey, we can invest in ourselves first, because that's where the best investment is in ourselves. And so once we did that, it really changed the trajectory of where our business was going, how we thought about what we could do, helping us, especially to get over our mindset and our limiting beliefs of ourselves and what we're able to achieve. And we wouldn't be able to do that on our own. You could, but it might take a lot longer. With a coach, you're able to, I think Tony Robbins is the one who says that you're able to turn decades into days, right? You're able to leverage a lot of their knowledge and what they've been able to learn and help other people. And you're able to leverage that to shorten your time period and to really elevate you and push you quicker and faster. And the accountability is there too. You're not wanting to let down your coach as they're pushing you as well. And you're holding yourself up to a higher standard. And the biggest thing is to really help get over that mindset, because once we made that mindset shift and realize that we are the only one, we are the keys to our own mind. And if we can get past that, if we can really believe that we can do bigger and better things, I mean, the sky's the limit at this point. In the past, before getting into multifamily, you're thinking, hey, that's only limited to the ultra rich people who are well connected. But after, getting help from other coaches and leveraging their experiences and like learning from other people, you realize, hey, I can also do this too. It's not just dedicated to these types of people. If I put the time and effort into it, through like with help from other people, I can also achieve the same thing.
Definitely. No, I echo that as well. And like I said, I've worked with coaches since, 4 or 5 years ago. I started back when I was like 24, I think, when I first got my coach. And the accountability piece is huge, because, it's one thing to say you're going to do something to yourself versus saying you're going to do something to someone else, because then that is kind of in the back of your mind. It's like, oh my gosh, I don't want to disappoint this other individual. And, it's very easy sometimes with yourself saying, oh, I'll push that off to some other later date, because you may not take your word to yourself as well as you would to your coach. And, my previous coach, that before, back in 2016 or 2017, he said, one time I came to the coaching session, and I hadn't done what I had said I was going to do before. And he's like, what does your word mean to you? Like, is your word in line with, or are you just blowing smoke, because you got to get to a point where it's like, your word is your bond. Like if you say it, then you're going to do it. Otherwise, then your word doesn't mean anything. And how are people going to be able to take you seriously? So getting very clear in understanding what exactly is that word because words are powerful. Words are extremely powerful. So if you think you can do it and you commit to doing it, do it. But be very careful with how you utilize your words, because again, people listen to it and then people draw conclusions based on what you say. So
yeah. And if you think about, like, you look at these professional athletes out there, famous singers, great actors, they all have coaches who help to course correct and to identify areas where there's needed for improvement, where they can get to that next level, that little extra, push where they might not necessarily see it. And so that's what a coach really does for you. They're not there to hand you the keys to the door, right? But they're here to help you get the tools that you need in order to build up whatever you want to build. And so it's really what you take from it and how you apply it is where the coach is really going to come in handy, and holding yourself also accountable, and holding yourself to that higher standard and wanting to continue to develop and push yourself.
Definitely. That's awesome.
Absolutely. So this is starting to round off at the end of the show. I just wanted to say that we appreciate you coming on. We benefit greatly from all your information that you gave us. And one of the things that we like to ask our guests is, what is one of the most impactful books that you've ever read? And it could be something that you read earlier on and kind of directed your career in a different path, or it could be something that was very recent. So. And it doesn't have to obtain to business. So
one of the best books that we read was the Think and Grow Rich book by Napoleon Hill. And that really opened up our minds to, it's really all about the mindset. And if you can think it, the limits out there are endless. You're able to push every idea starts with like yourself and your mind. And so if you can think it, you can end up achieving it, but you have to really truly believe it. And you have to really believe in yourself that you're able to achieve these bigger and greater things.
Absolutely. It's a great book. Yeah.
That's probably, if not the most, probably the second most recommended book. I know Rich Dad Poor Dad's a big one that a lot of people share. And, Think and Grow Rich. I know, Jeff, you mentioned it's definitely one of those books where you read it and then you reread it and then, put it down for a bit and then reread it. It's just kind of, it's those timeless pieces of knowledge and insights that, apply to regardless of the decade that you're in. So that's awesome. So again, Aileen, we really do appreciate your time. It's been great to kind of talk to you and get to know you and build this network, build this connection that we've, ultimately done so in this interview. One thing I wanted to ask prior to hopping off was, we have something called the Commercial Real Estate Treasure Chest. It's a repository of resources that we make available to our audience. And these are like helpful PDFs, Excel sheets. We've had people contribute ebooks, et cetera. So I wanted to give you the opportunity. What are you willing to contribute today to the Treasure Chest?
Yeah, absolutely. So if they want to go to our website, www.bonavestcapital.com/checklist, they can download a passive investor checklist for apartment syndications. So it's just a checklist that they, as they're doing their due diligence on being a passive investor, it's something that that we utilize that kind of helps keep things in check, and so that you can look at it as you're doing your due diligence.
That's awesome. Yeah, we'll include that link in the Treasure Chest as well, so you guys can gain access to it once you do sign up for the Treasure Chest. So again, Aileen, go ahead.
I was just saying, I was just going to say it's great that you came on. We really appreciate your time. And then I know other people are going to listen to this and want to contact you. In what way should they contact you?
Yeah, feel free to email me directly. It's Aileen, AILEEN @bonavestcapital.com. And I'm just happy to chat with anybody about real estate or anything else. So feel free to contact me.
That's awesome. So we will include that in the description below. So if you guys are watching this on YouTube, feel free to go in the description. Her contact information is going to be there. If you're listening to this in a podcast format, whether that's Apple Podcasts, Spotify, whatever podcast medium you're listening to this on, it's going to be in the description below as well. So again, Aileen, thanks so much for stopping by. If you guys are listening to this in a podcast format, we greatly appreciate it if you could leave a 5-star review. We've seen a significant uptick in our downloads as a result of you guys engaging with the podcast and leaving a 5-star review. So we would greatly appreciate it if you could do so. If you guys are watching this on YouTube, please, please, please like and subscribe to the channel. It helps with the YouTube algorithm and ensures more and more people can hear this message. So thanks again for tuning in, and we'll see you all next week.